So today we're looking at reasons for trading. Why are you trading? Why do you want to trade forex? Or why are you trading? What's your reason? What's your motivation? A few years ago, I wanted freedom. I wanted freedom from work. I wanted freedom to be anywhere I want in the world. I wanted financial freedom. I wanted time freedom. I wanted it badly. That was my reason, and my reason has not changed. So quickly, financial freedom, that's money. 2, time. Time freedom. Who else again? 3 is to help others. See, if you are not true, if you are not afloat, you can't help anybody. If you don't have the means, you can't help anybody. Whether knowledge, money, whatever it is, you can't help anybody if you don't have. And 4 is to do the business around trade. You can hear me now, I suppose. So these are the reasons why I'm personally trading. Why I'm trading to make money. I'm trading to have financial freedom. I'm trading to be able to help others. And I'm trading to build business out of trading. Recently, I had to help some people build an EA that will help them pass Prof-Firm. You know, we built an EA, so all you need is plug the EA to your Prof-Firm account and it will pass Prof-Firm for you. As easy as ABC. That's helping people. We had to devise an EA that's running a copy account. All you need is to attach your account to that copy account. As it's trading, you're making money on the other side. We should take loss, you take loss as well too. Now we have trading sessions, different businesses around trading. Once can take, we have full loaded crypto courses you can come and learn. We have a community for crypto where you can trade along with us every day, all for free of charge. In synthetic, we have a class for synthetic. We just finished. Another one will soon start. You can be part of it. Synthetic is just like this market, but it's an algorithm-generated market where the only thing it respects is technical. News does not affect it. Then we have the binary. Every Friday and every Wednesday, we trade live. Now we're helping people, but again, lack accountability. That's our topic today. Accountability. How are you accountable in trading? How do you hold yourself accountable in trading? Quickly, I'm going to list out a few ways to hold yourself accountable. Number 1, very key, find yourself a trading mentor. A trading mentor may not be someone you have to see. Someone you certainly like, they have the results you're looking for, and you have access to them. Today, social media has made it easy to reach out to everyone. Find yourself one. 2, create a trading journal. Guys, this information I'm giving you now, you think, oh, is that what it's saying? Don't worry. This is what it takes to succeed in trading. Number 3, trade your plan. Create a trading plan. Have a trading plan that suits. And 4, very importantly, have a routine timetable, a routine plan for enhancing yourself. Capacity development. What you are going to learn today is not enough to take you through. I have not stopped learning. Recently, I paid close to $1,000 to do psychology, to learn psychology of trading from one of the best, Tom. I paid about No, it was so 63 million accounts, trading account. They looked at it. They find out something staggering. They find out that, hold on. Okay. They find out that people who trade, that 65% of them really got the direction of the market. So it wasn't a problem of knowing where the market is going to go. The trade that they enter, 65% of them got the right direction of the market. Only about 35% got the market direction wrong. But majority of them lost their bank. What happened? They find out that when they win so small. But when they lose so big. So gradually the account begin to deplete. The account begin to deplete. The account begin to deplete, and eventually they are off the market. It was a broker that did this finding. When I heard this, it hit me like a tornado. So what's the right approach? The opposite is the right approach. People who are here, if you are a trader here, you're comfortable. When you have a losing trade, you're comfortable, you allow it run. But when you have a winning trade, you don't want to waste time at all. You say, let's take it. And there's this slogan people usually tell themselves: you never get broke taking profits. You tell yourself, you never get broke taking profits. That is $1, let's take it, let's take it. Yeah, you take it. How is $2? But when there is a loss of $1, they leave it. It goes to $2. It goes to 3. It goes to 4. It goes to 10. It goes to 100. It goes to 150. You're very comfortable. You are waiting. It will turn. It will turn. Don't worry. By the time I come back, it will turn. He found out again that the percentage at which this market turn is very slim. Most time it don't turn. So when you're wrong, you're wrong. When you're right, you're right. So how do big traders now make money from the market? Because the same market we're trading. You will find out at the end of this class that it's not skills you are losing. You're not losing skill. You're struggling at the level of psychology. And that's why I had wanted to break this class so that the advanced class can really enjoy the class. Will come steady. We're not thinking of the other people. But that being said quickly, your challenge is that you do not have plans for self-development. You may have started this class on a free class, but have a plan. Shouldn't even be Modern Skills Academy. Anywhere you know you can have access to people who are trading and they are consistent, they're making profits. You might want to have plans. Keep updating yourself from time to time. Keep learning. There's always something new that drops in every time. Get access to good resources and continue to learn. That being said quickly, now let's get it to Trading Mentor. All of you have access to 1, 2, 3. You can have as many as possible. So if you're not in our trading group, please join that trading group. It's going to be very active. For a while, I noticed that majority of people, and also I just decided to let go. But with more activities around there, we'll be discussing trade. What I'll be doing is that I'll be plugging trades I'm taking there. I'll plug trade and I'll let you know the direction of the market, and I'll let you know where I'm facing and what the market is doing and what you can do. I used to do weekly analysis. On Sundays, we do weekly analysis and show you where the direction, where the market will go. Many a time we find out that those trade market will go those direction because we're looking at the market from a higher time frame, a daily time frame. So we look at a very large extent. Where is the overall direction? Many a time we know the direction. In fact, your problem is not knowing the direction. Your problem is having the right tactics to collect from. Even though you know the direction where it's good, doesn't mean you can't lose money from it. Knowing the direction is one. You could lose money for even knowing the direction. But look at what knowing the direction does to you. It helps you stay put. So you stay put on a trade when you know the direction. When you don't know a direction and you stay put on a trade, what you get is account blown up. So knowing the direction of the market is critical. Two, the journal. You must keep a journal of your trading activity. It could be a physical journal, it could be a system. Please remind me, I'm going to drop a template, a trading journal template. You can create yours from there. Keep your record. I entered GBP USD. What session? London session. What is my stop loss? My stop loss is this. My take profit is this. This is my lot size. This is why I enter. What is my entry condition? This is what I saw. This is a strategy. My strategy says buy. You wait for that trade to run. If that trade hits stop loss, you go back again and find out what happened. Why did this trade hit stop loss? Why did it not go my way? But my strategy said, if I watch that 3, 4, 5 in a week time and I find out that this strategy is not, I don't need a soothsayer to change the strategy. I just know that this my strategy is not working again. Because you don't track data, it's become difficult to make a decision that will impact your trading accounts. The journal will help you keep track. Don't say, no, I know what I take. I know you know what you take is in your head, but you need to go back again to track. And if you win the trade, you must go back and say, hey, this is working. That's when you can tell yourself that this my strategy is 70%, 80%, because you have real reason to make that judgment. There's no strategy that is 100%. There's no strategy that will make you win every day. See, losses is part of trading. Losing trade is part of it, just like winning trade. You could have a trading plan that will say that for every 10 trades, if you lose 7 and you win only 3, you will still make profits. That's the sense of creating a trading plan. So before we leave here today, we're going to create a trading plan. We're going to create a trading plan. At least you get to know your trading plan. So creating a trading plan will help you to track yourself, hold yourself accountable. Guys, these 4 items I have listed here are exactly what helps to keep you accountable. So let's dive into number 2, the trading journal. I said I'm going to send a copy to the group. Please ensure you are in the main group. Ensure you're in the main group. You're in our clusters. Then you have access to all this. Then the trading plan, we're going to create trading plan. So quickly, I'm going to erase this and we will start with the trading plan. If you have questions, let me know. Any questions? What are the elements of trading plans? Any questions so far? In absence of no questions, we forge ahead. Now, what are the elements? Someone help me. What are the elements of trading plan? So you begin to feed me. Everyone begin to feed me. What are the elements of trading plan? Number one element of a trading plan is not a strategy. Number one, what is your entry condition? Your entry condition must be well outlined in your trading plan. Your entry condition could be, I must get a pin bar. I must get a hammer. Once I see a hammer on the support, I will buy. When I see an evening star on a resistance, I will sell. That's your trading condition. So even if somebody gives you a trade, you call a trade for me, I go to my chart and I look at my trading condition. Is that there? If it's not, I'm not taking your trade. Doesn't matter who gives the trade. Even if it's an angel that delivered the trade in my hand, I'll still go and check. Angel, now I'm doubting you. But I'm going to check, is there a pin bar or a hammer on this? Is there an evening star on this? Is there an engulfing candle here? Is there a W formation? Is it a double top or a double bottom? what exactly, why should I enter this trade? You must have the entry condition. Number two, what's your closing condition? At what point do you close? Why? So that you don't just close any trade. Your running trade is in profit. You just yank it out. Because the last time you waited, the trade you were waiting for hit stop loss. And today you're not just ready for that stop loss. Let me take what I can see. A bird at hand is better than 2 or 1 million in the bush. Am I speaking your mind? Am I talking to somebody here?
Yes, sir.
Oh, they say there's interference. Is interference here? Can you still hear it?
We can hear you, sir. And sir, we can hear you.
The interference, are you still hearing the interference?
No. No interference yet.
Okay, thank you. My office is very close to the road, so you can hear
It's
vehicle horn.
clear now.
Okay, so the next one is, what's your stop loss? What's your condition for stop loss? What's your condition for stop loss? Now here, I'm going to condition for stop loss. Is there anyone who does not know what stop loss is? Usually, there are two ways or three I recommend for stop loss. One is having a very tight stop loss. If your strategy is such that have a stop loss, then you want to look at the next low or the next higher high. What do I mean by that? I'm going to show you this. If you have this, sorry. If you have this to be price movement, you know, this is a subtle upward trend. So this is low. This is high. This is low high. Oh, sorry, this is higher low. This is higher high. This is higher, another higher low. And this is higher high. Don't mind my writing. Now, if this is a price moved, this is where the price took off from. Price went up. This is my entry. It just confirmed my entry. And it did a pullback to here, and I decide to enter. I want to enter here. Here is my E. After I found my condition for buy, remember my entry condition, I would have seen it. Maybe an engulfing candle, engulfing the last bearish candle here. And I enter, maybe say here. And price is going up. Now, principle number one is look for the next lower. If this, remember there must be one here that has happened before. So someone will want to put a stop loss here and say, this is my stop loss. But remember, this zone is a liquidity zone. A lot of people will put their stop loss here, and they will hit and they will start crying. It's a liquidity zone. Means that the market can come back again. Market maker can come back again, sweep through here before they continue to go up. It has not violated this trend. Price can come here, sweep here, and go up. So it would have closed you out in your stop loss. Does it happen to anybody? This trend is still in vogue. If you put your trend line, you get something like this. So you see that price broke here, return back. This is called fake out. Price faked you out, took out your stop loss, and market has gone. So here is the advice. Always don't put your stop loss on this support. Put it below the support. That's one way to set a stop loss. Another way to set a stop loss is to use a specific. Some people will say, I'm taking 100 pips. You look at different currency pair on the daily price range. Euro USD, that is EU, has a maximum movement on a daily of between 70 pips to 100 pips. So someone can come and say, I'm putting my stop loss at what? 100 pips below. So I count 100 pips and set my stop loss. Because I understand that EU has 70 to 100 pips movement daily. That's average. When we mean average, it could be more, it could be less, but that's the average. That's another way to set. Someone can come and say, it doesn't matter where I enter, I'm going to set 30 pips from here. If it's going 30 pips, close me off and continue to go. I will find another entry. However you're going to set it is up to you. It's up to the strategy you're using. I'm not going to define that for you. So I've shown you two ways to set stop loss. The same way for sell. For sell is a reverse of what we've done here. Now, what's the other way? What are the other elements? I want to quickly list out the other elements. The next one is take profit. What's your take profit? What's your take profit? And here, I really want to talk. The next I want to talk is your reward to risk ratio. What's your reward to risk ratio? Because as you're taking profit, what's your reward to risk ratio? What's your reward to risk ratio? Stop loss, take profit. Anytime you're trading and your reward to risk ratio is less than 1:1 or 2:1, then I'll start asking questions. I have a lot of questions. I have someone who trades, his take profit is, his TP is only 10 pips. And his SL is 100 pips. So you see many trades, you can see like 20 trades that he won. That will give you about 200 pips. But anytime you have a major loss, it's going to be a big one. So if he has back-to-back, it will demoralize you. Imagine you have not won the first trade you had, it was a back, you hit 100 pips, you hit another 100 pips. But the good thing for him is that this keeps him safe. The only trade he loses with this are trades that are not going his direction. This is his trading style. His trading plan specifies this and he's following this. So again, my job is not to teach you what to do. Your job is to look at what works for you. Why another person, my very good friend Bonsu, his own is 1:10 minimum. He's taking a trade. He's looking for a trade at the point of reversal. So he takes only reversal trade. This is a double top. He finds an entry here. He enters here. Here is his entry. He puts his stop loss up 5 pips away. He does 5 pips away from here. Put his stop loss 5 pips. Then his take profit is about 50 pips. Now, if this trade is not going, it just goes up, it knocks him off. He starts waiting for the same trade. He can find that trade again and enter again, and it does 50 pips. He has made his profit. He could lose 10 trades and win just only 2 trades, and he has made his day. Excuse me. So you must choose what works for you. So your reward to risk ratio, be careful in choosing your reward to risk. What's your take profit? At what level are you exiting? Now, it's stupid for me to choose my stop loss, my take profit from I'm selling from this point. I come and put my stop loss here. So my take profit, I'll say, this is my TP. Then when it comes down to here, we'll come and hit TP. already you saw is a downtrend, that the next move is going to be here and price will continue up. And this is what it's going to continue to do. So it's out of ignorance to put my TP here, or even put my TP here. So I should understand my TP has to be around this area so that I can quickly take TP. Otherwise, I would leave this entire market structure. It's not for me. If my trading plan states that I am not taking anything against the trend, I focus on the trend. So what I'm taking is a trend that is on the trend. This is my trend. This is my channel. I enter here. Even if I enter at this point, I know that this is where I'm heading to. So price took me down, which of course I will not do. Take me up again, I'm in profit. I'm in little negative. Then I'm in profit. I'm in small profit, big profit, profit reduced, the bigger profit. As it continues to go up, I'll enjoy my ride all the way up. So guys, choose your reward to risk ratio very carefully. Does that make sense? Okay. So that being said, quickly, the next element, quickly, I'm going to round up, we'll discuss. The next element is your leverage. What's your leverage? A lot of people don't know how to set leverage. I see a whole lot of funny leverage. And they set leverage because the broker taught them how to set leverage. In the entire Europe, you can't set a leverage of more than 1 to 30. 1 is to 30 is the highest you can ever take. I see people set up their account. They use leverage of 1 is to 2,000. Uncle, who is advising you? Remember, when you use 1 is to 2,000, it means that you can take bigger position because leverage is a borrowed fund. What is leverage? Leverage is that I have $100, but the broker said choose a leverage. If I say leverage of 1 is to 1, what it means that for every of my $100, the broker is going to give me another $100 I will trade with. If I use 1 is to 100, it means for every $100 they're going to give me 100 times that amount of money. If I choose 1 is to 2,000, they're going to give me 2,000 of that amount I have. Now, what's happening here is that that's how my risk is going to increase because I suddenly think I have lots of money. So I increase my risk. As my risk goes up, the broker makes, remember their commission is built on it based on the lot size I'm taking. As I take bigger position, they will make bigger spread or commission on me. So when in Nigeria, this space is not regulated. Guys, I'm being honest, it's not regulated. The government has not sit down to regulate the trading space. So brokers come in, go out, play funny, do funny things. And that's why I recommend good broker. There are no very beautiful broker that's a saint, but some are better than others. Some are just criminal. We once set up a broker account we traded over $30,000. Time to withdraw. Story started. $30,000, we did not withdraw $1 from it. The question, who sent me? So that's the journey with brokers. That would be a discussion for another day. But guys, like I said, it's from years of looking forward, seeing their process, and I've seen that HFM Hot Forest has really improved, and we're partnering with them. They've improved with their services. They improved most of the account. If you're setting up account, please set up your account on the Pro account. The Pro account are better. They give you very tight spread, and their liquidity. They give you access to the market directly. You have access to ECN, the ECN trade, ECN account. You have access to the pool immediately, and you pay very light spread on it. In some cases, there might be commission to it, but it's your best bet. That being said, too, you're looking for broker that have money to pay you, not broker that you give money. When time to collect money, you run up and down. Now, three reasons is that you want a broker in Nigeria, you can walk to their office. If they don't give you your money, you can take them to anywhere. Please avoid this online broker. They advertise, tell them to come and open office in Nigeria and start their business so that you can see them. You can take them to court when their need arise. Stop patronizing online broker. It was online broker that took my $30,000. Tomorrow I can't do anything. Set up account, start trading. As the money grow to take money, story started. That being said, quickly we move on. So I've discussed leverage. Please, here is my standard for leverage. If your account is less than $1,000, do 1:100. The truth that you can't trade without leverage. If your account is less than 1,000, do 1:100. That's fine for you. The disadvantage is that sometimes you want to take, when you want to overtrade, you want to take, it will tell you don't have enough money. It will hold. It's just like putting a speed limit to your tire so you can't overspeed. It's for your good. You will thank me later. Some will load their account. They will say we'll double your money. If you do $1,000, we'll give you $3,000. Please run away from such gimmick. They're all leveraged too. You're over leveraging that account. The first question you ask them, if I load 1,000 and you give me 1,000 extra, I have 2,000. Can I withdraw your own? The answer is no. If it's yes, withdraw their own. Withdraw your own and trade with their own. You see that they won't give you such access. Please run away from that. That being said, next one is position. Your trading position. Your trading position. I see a lot of persons in their trading position. They are having over 15 trade running on a $100 account positions. Trading position. I mean trading position. You have TP1, TP1, TP2. You're running. How do you increase position? This is how. If this trade, you see my chart. If this is an uptrend, I enter my first trade here. This has gone up, did a retracement, and is going up. I can enter the second position. It means that this is already in profit, and market has done retracement. After this retracement, I can enter another position here, and they continue to go up. If it hits this resistance and it decides to do another retracement again, and then he has given me another entry, I can enter my third trade. So I have 1, 2, 3 trades, and the 3 trades are all in profit. This profit has been secured. I will secure this because already when it's there, I will move my stop loss. At this point, my stop loss for this first trade will be here. My stop loss for this second trade will be my entry of the new one. And the new one is only rocky. You see that the new one, I don't have absolute no risk at all. So these 3 trades are running well. If anything happens, this will pay me. This first trade will pay. This second one will pay. Only this one will probably hit my stop loss, and that's enough to net off my risk. Trading is business. Trading is not gambling. I see people who line up 15 positions running on one account. I'm asking you, hello, sir, where are you going to? Now, the next one is lot size. Position and lot size can be the same thing. Position is the number of trades you're taking. But sometimes you say, it's only one trade I'm taking, Mr. GD. But that one trade, you're using one standard lot size on a $200 account. You have just compressed them in one account. Lot size. What's your lot size? Now, here's the recommendation. I see a lot of people. The standard recommendation is one lot size for $100,000. I see someone said that a particular broker told him for $10,000 he can use one standard lot size. It's a lie from the pit of hell. If you use one standard lot size, they will make more money from you. That's what it means. Broker don't care if you lose your account, as long as they make money. So the standard principle is one standard lot size for $100,000. So if you are using $1,000, you should use 0.01. We'll say, 0.01 on $1,000, how can I make? But that's why you lose accounts up and down. So if you have $100, you see that you've been short-termed severally, your hands has been cut off severally. So for small account user, my advice is usually you can't use anything less than 0.01. If you have smaller account, change your account to a cent account. With that, it gives you better leverage. You can trade properly. Please, if you use this lot size, you hardly lose your account. But if you must trade using your $100 account to trade, make sure you don't trade more than 1-2 positions at a time. I'm sure this information is well passed. And then Finally, your trading section. What market do you trade? What session do you trade? The biggest session is the London session. London session opens 9 a.m. Nigerian time because of time difference. It will run all the way to 2 p.m. Nigerian time. The New York session starts by 2 p.m. Nigerian time. No, you know, London session will run into about 5. Yes, thereabout. Then the New York session will start. It's the next biggest session. So, but why do we prefer to trade in the afternoon between 12 to 1? That's about when the time. So these two markets come together, the London and the New York session stay together. That's when you have the highest pool of liquidity. That's when you have the largest volume in the market. That's when you have the highest volatility in the market. That's where people make money. After that, the market goes to a slow motion mode. Then you can have a trade run for this. I'm not saying that the Asian session and the Tokyo session, the Tokyo Ocean and other sessions are not great. People who can trade that should trade that. I do not like to trade that because of they don't have the kind of volume I'm looking for. So my advice is look at London and New York session and choose what best time to trade. However, if you don't have time, you can choose to trade in the night. You become a nocturnal animal, you trade at night. That's okay. Then how often do you trade? Is it once a week? Is it twice a week? Here you begin to define the kind of trader you are. Are you a swing trader? Are you a scalper? How often do you trade? How often do you trade? So trading plan is not limited to this, but these are the very pressing ones I could extract from that we want to discuss. So at the end of this session, I expect everyone to share with me their trading session. Please share with me your trading session. We'll look at your trading session during the course, and then we can advise and we can try them out and know what we need to do extra. Guys, it is 1 o'clock. This is the end of my class. I want to spend the next 2 minutes, 3 minutes, 5 minutes to take questions. Please, can I have your